here's what we're getting into today, because this might honestly be one of the biggest turning points Hedera has seen in a long time. And if you're holding HBAR or even just watching from the sidelines, this is something you need to hear. Hedera just got its first ETF listed on Vanguard. Yes, we're talking about Vanguard, the $11 trillion asset manager that basically avoids crypto entirely. But not only did this ETF officially start trading, it immediately triggered a wave of crypto spot buying strong enough to push HBAR up 6.5% in a single day. And that move didn't come from hype. It came from real institutional inflows and a shift away from leveraged speculation into long-term accumulation. So today, we're breaking down why this ETF is such a big deal, why institutions are suddenly paying attention to Hedera, how this connects to the 80 million of inflows that Canary Capital's HBAR ETF pulled in recently, and what all of this means for Hedera's short-term, medium-term, and also long-term price potential, including that realistic path forward to $0.5. You're watching Crypto Blogspot. I make unbiased crypto videos with no sponsor influence, so if transparency matters to you, make sure to like the video and subscribe. And of course, this is not a financial advice, just data and analysis. Now, let's jump straight into it. Out of nowhere, Solid Intel posted that the first HBAR ETF has officially begun trading on Vanguard's platform. And if you've been in crypto even for a few months, you know how insane that is. Vanguard refused to list Bitcoin ETFs when the entire market was listing them. So the fact that Hedera, out of all of these assets, is now listed on Vanguard is one of the biggest green flags of the year. And the market reacted instantly. HBAR pumped 6.5% on the same day. Vanguard confirmed it. What makes this even more interesting is that it wasn't futures traders pushing the price, it was spot buyers, real long-term buyers, because CoinGlass data shows HBAR futures volume actually dropped 16% at the same time, which means people weren't gambling on the news, they were accumulating. And this perfectly lines up with what happened when Canary Capital launched its HBAR ETF on Nasdaq. That fund pulled in $80.26 million of net inflows in its first month and now holds $59.3 million in net assets. And again, most of that came from spot activity, not leverage, not speculation, just actual demand. And that's the entire point of ETFs. They don't create hype, they create access. They let traditional investors and institutions buy HBAR without signing up for crypto exchanges, without worrying about the wallets, and without dealing with custody or key management. Suddenly, Hedera is accessible to a completely new group of investors who literally could not buy it before. And Hedera themselves acknowledged that being listed on Vanguard is a major validation of the network's long-term potential. Hedera has always been designed for enterprise use, supply chain systems, public data integrity, tokenization, government integrations. This is a network that is built for institutions. And now institutions finally have a clean, regulated way to invest in it. But here's the part nobody is talking about. This ETF signals a shift in what big asset managers are willing to list. We're seeing a move away from the old only Bitcoin and Ethereum mindset. Grayscale launched products for Chainlink, XRP, and Solana. Now Vanguard is listing Hedera. And when firms of this size open the door to alternative layer 1s, it sends a strong message to the rest of the market. Hedera is benefiting from this shift at exactly the right time. Bitcoin is already back above $90,000, sentiment across the market is improving, but many altcoins are still struggling with liquidity and volatility. Now this ETF could actually stabilize HBAR because spot demand helps strengthen support and reduces violent downside swings. Now let's talk about price potential. Without timelines, without guessing specific years, just realistic ranges based on current data. So the short-term outlook is this. A bullish scenario puts HBAR somewhere around $0.25 to $0.35. A base case scenario is 0.15 to 0.25. A bearish scenario is 0.08 to 0.15 if the crypto market heads into a downturn. And here's the medium-term outlook. As adoption grows and tokenization expands, HBAR realistically moves into the $0.3 to $0.45 zone. And the long-term outlook is, first of all, the big question: can HBAR reach $0.5? Now, based on technology adoption, the network growth, the enterprise integration, market expansion, and regulatory improvements, the probability sits somewhere around 50 to 70%, depending on how those variables play out. Not guaranteed, but absolutely realistic, especially with ETFs opening the door for institutional capital. Hedera still has challenges: regulatory uncertainty, competition from other enterprise networks, execution risk, and the pace of real-world adoption. But for the first time ever, institutions finally have direct regulated access to HBAR, and that was the missing piece for years. So when you combine everything, the Vanguard listing, the $80 million inflows from Canary, the drop in leverage speculation, the rise in spot accumulation, and the growing appetite for non-Bitcoin and non-Ethereum assets, and the realistic price roadmap, you get a picture where Hedera is no longer just a technical project. It's becoming an institutional grade asset with legitimate on-ramps. And that is a big deal for long-term holders. So keep your eyes on the spot inflows, on the ETF performance, and whether more platforms begin listing Hedera-based products. Those indicators will show whether this move is the start of a long-term trend or just the first wave. And this is it for this video. Thanks for watching. If you appreciate real data-driven content and no sponsors and no hype, make sure to like the video and subscribe, and I'll see you in the next one. So stay tuned.